So good day everyone. I'll be the one to report the chapter 22, which is the substantive test of intangible assets, goodwill, and corporate expenses. So, what is intangible assets? So, it could be franchises, a copyrights, a patents, or a trademark. So, maybe it acquired singly as a part of a group of assets or as a part of an entire entity. So for the audit objectives, when auditing intangible assets, goodwills, and corporate expenses, the principal objectives for the substantive test is to determine the following. So the assertion category, there are the existence or occurrence, the completeness, the provisions and allocations, the rights and obligations, representations, and disclosure. So for the accounts balance audit objectives of the existence or occurrence, it is all recorded and identifiable intangible assets and corporate expenses exist and will benefit for the future period. So for the completeness, all intangible assets owned by the entity are included in the SFP. All corporate expenses paid in advance by the entity are included in the SFP. So for the valuations and allocation, intangible assets or prepared expenses are included in the SFP at the appropriate amounts and are being allocated in a systematic and rational manner to the accounting periods permitted to be benefited. So for the rights and obligations, the entity owns or has a legal right to the identifiable intangibles included in the SFP. The entity is entitled at the reporting date to the future benefits related to the corporate expenses included in the SFP. And the last is the presentations and disclosure. So intangible assets and related accounts, goodwill, and corporate expenses are properly classified, described, disclosed in the financial statements, including notes in accordance with the PFRS. So, analyze and examine evidence of valuations and tangibles. Primary audit objectives, existence or occurrence, rise accuracy provisions, and occasional presentations and disclosure. So, the auditor should obtain an schedule of intangibles, including goodwill, which shows the beginning and ending balances and additions and disposals during the current period, including the write-offs, if any. So, for the original cost of intangible asset, the auditor will ordinarily refer to the permanent file of the prior year, working paper, and roll it forward to the current year. So, however, for an initial measurement and for initial engagement, the auditor may refer to the previous audited financial statements or the prior working paper of the predecessor auditor or evidence supporting the amount initially recorded. So, for the cost of addition, in examining the cost of intangible assets acquired during the period, the auditor generally vouches supporting documents on cash paid to acquire and register an intangible asset. So for internally generated intangible asset, the auditor should check whether the amount capitalized is in accordance with the strict requirements of the PEAs or the past 98 intangible assets. Next is the disposals. The disposals, additionally, the auditor shall also test the disposals of intangible assets during the year. So in performing this test, the audit evidence regarding the recognition is obtained, such as the appropriate authorizations or the related board means of the transaction. So the evidence of cash receipts likewise obtained as the audit objectives regarding the accuracy, occurrence, and appropriateness of gain or losses on the disposals of intangible assets are tested as well in this procedure. Amortizations. So amortization is an example of an accounting estimate. PSA 540 revised requires that in evaluating accounting estimates, auditors first obtain understanding of the client's process and controls in developing accounting estimates. So, in auditing amortizations, the auditor's objective is to obtain sufficient appropriate audit evidence about whether the amortization recognitions in the financial statements are reasonable and related disclosures required the financial statements are adequate. And the last is the impairment. So if 1536 requires that an entity should review assets for impairment whenever events or changes in circumstances indicate that killing value may not be recoverable, the management should provide impairment loss to carrying amount of an asset is greater than its recoverable amount. So if an impairment revision was made or the auditor considers it necessary, the auditor ordinarily should perform the following procedures. First is the evaluate and the appropriateness of the valuations model and assumption used. Second is the the reasonableness of management estimates and evaluate the accuracy, completeness, and the relevance of the important data on which statements or measurements are based. So to perform analytical procedures for intangible assets and goodwill and corporate expenses. So the specific trends and ratios used in judging the overall reasonableness of recorded amounts for intangible assets, goodwill, and corporate expenses will vary with the nature of the client's operation. Among the ratios and trends commonly used by auditors for this purpose are the following. First is the ratio analysis. The total amortization expense divided by total cost of intangible assets. P is total corporate expense divided by the total current assets. And the second is a trend analysis. It is a comparison of intangible assets on a monthly basis and from year to year. So comparison of acquisitions for the current year with prior years, and last is the comparison of retirements for the current year with prior years. So for the evaluate financial statements, presentations, and disclosures, for each class intangible assets, the auditor should check whether the entity has disclosed the following requirements under PAS 38. First is the basis for measuring carrying amount. Second is amortization method used. Useful lives amortization rates used for the gross carrying amount and accumulated amortizations and impairment losses at the beginning and the end of the period. And the last is the reconciliations of the carrying amount at the beginning and the end of the period. So for the special audit considerations for goodwill is not considered to be part of the intangible asset since it is locked in one of the critical attributes of an intangible asset, which is the sale is also considered to have indefinite useful life, therefore subject to amortization, but should be subject to annual impairment accordance with the PES 38 for the past 38 intangible assets.
Good day, Carlo Ray Aguelo here, and I'm going to discuss about intangible asset. Intangible asset refers to identifiable non-monetary asset without physical substance. So we have three critical attributes of an intangible asset. Number one, identifiability, if it is separable asset or non-separable. Second, the control. Control results in the entity being able to obtain future economic benefits generated by using an asset and mistake other parties by obtaining them. And third is the future economic benefits if it arises from increase of the revenue or reduction of costs. Here are some examples of identifiable intangible assets, namely patent, copyright, franchise, trademark or brand name, customer list, computer software, broadcasting license, airline right, and fishing right. An identifiable intangible asset is squarely describes a goodwill. As to recognition, PAS 37 requires an entity to recognize an intangible asset if and only if A. It meets the definition of intangible asset. B. It is probable that the future economic benefits that are attributable to the asset will flow to the entity. And C. The intangible asset can be measured reliably. If recognition criteria does not meet both of the definition and the criteria for recognition as intangible asset, PAS 38 requires the expenditure of this item to be recognized and expensed when it is incurred. For the initial measurement, intangible assets are initially measured at cost. For the illustration, we have on January 1, Anita Co. incurred the following cost for the generation of trademark. These are the following transactions. Cost of materials and services used or consumed in generating the trademark amounting to 500,000. Amortization of patents and licenses that were used to generate the trademark, 25,000. Selling administrative and other general overhead expenditures, 60,000. Borrowing costs arising specifically from the funds borrowed for the generation of the trademark, 10,000. Advertising and promotional cost for the product generated by the trademark, 20,000. Cost of employee benefits incurred in generating the trademark, 40,000. And fees to register the trademark, 20,000 pesos. Required. How much is the cost of the tangible asset? 2. Assume instead that these costs were incurred for the generation of masthead. How much is the cost of the intangible asset? So for the solution, we will go to the requirement number 1 about how much is the cost of the intangible asset. So these are the transactions that will include cost of materials and services used or consumed in generating the trademark, 500,000. Amortization of patents and licenses that were used to generate the trademark, 25,000. Borrowing costs arising specifically from the funds borrowed for generation of the trademark, 10,000. Cost of employee benefits incurred in generating the trademark, 40,000. And the fees to register the trademark, 20,000. And a total amounting to 595,000 pesos. Let's now move on to requirement number 2. Assume instead that these costs were incurred for the generation of masthead. How much is the cost of the intangible asset? Answer: 0. All of the above costs are to be charged to expense since cost incurred on internally generated masthead is not capitalized.
So good day everyone. I'll be the one to discuss amortization. So what is amortization? Amortization is a systematic allocation of amortizable amount of intangible assets over its useful life. Or in other words, it is an accounting technique used to periodically lower the book value of a loan or an intangible assets over a set period of time. So what is amortization method? So it is a technique used to periodically lower the book value of a loan or an intangible assets over a set period of time. An amortization period is the amount of time in which the company expects to generate revenue from its license. So the revenue method is typically aims to amortize the revenue so that it is correctly reflected on the period for which it was received. The amortization entries can be created directly from a billing with a selected period of time spread up to 60 accounting periods. And also the residual value is the intangible assets with a finite use life shall be assumed to be zero unless number one is there is an commitment to a third party to purchase the assets at the end of its useful life. And second is there is an active market for the assets. So uh, next is patent. Patent is an exclusive rights granted by a government giving the holder of exclusively use to manufacture and sell a product or process for a period of 20 years without interference or infringement by others. And also the term of patent shall be 20 years from the filing date of the applications. So patent is an exclusive rights granted for an invention. So examples is a new drug to treat cancer, a new display systems for mobile phones, and new process for producing chemical compound. As long as it involves inventive step and it is new and industrially applicable and of course non-obvious, have the right of patentability. So next is cost of patent. So when purchase if internally developed. Second is includes purchase price and any directly attributable expenditure in preparing the assets for its intended use. Cost include only on a licensing and related legal fees and securing the patent's rights. So the costs are expenses as incurred. A is research and development cost. Second is our legal fees and other costs of successfully prosecuting or defending patent, and legal fees and other costs of unsuccessfully prosecuting and defending legal patent. Next is amortizations of patent. Number one is the original cost should be amortized over the legal life its useful whenever it's shorter. Second is competitive patent is required. The competitive patent and old patent should be amortized over the remaining life of the old patent. Number three is ang related patent, which consists of two components. Una, ang extensions of life, the related patent together with the old patent should be amortized and over the extended life. Kaduha is no extensions of life. The new related patent should be amortized over its own life, while the old patent should be amortized over the remaining life of the old patent. Next is, so here are the different entries involving patents. To record development of the patent, debit R&D expense, credit cash or other appropriate account. Second is to record the cost of licensing and other necessary costs for its intended use. Debit, patent, and credit cash or any other appropriate account. To record amortization, debit, patent amortizations, and credit accumulated amortizations of patent. Second, fourth, to record the cost of successful or unsuccessful defense of patent infringement, debit, legal, and professional expense, credit, cash, or any appropriate account. Fifth is to record the sale of patent. The issue. First is debit cash, accumulated amortization of patent, loss on sale if any, and credit patent and gain on sale if any. Number six is to write off the patent account. Loss on patent, write off debit, accumulated amortizations of patent, debit, and credit patent. Next is copyright. Copyright is an exclusive right granted by the government to the author, composer, or the artist, enabling him to publish, sell, or otherwise benefits from its literary, musical, or artistic work. The rights of an author shall last during the lifetime of the author plus 50 years after his death and shall not be assignable or subject to license. Examples of these are the audiovisual works such as TV shows, movies, online videos, sound recordings, and musical compositions. So, ang cost of copyright. Number one is develop copyright. Cost assigned to copyright consists of all the expenses incurred in the productions of the work, including those required to the established of obtained right. Second is purchased cost, includes the cash paid and other expenses incidental to the acquisitions. Amortizations of copyright. The amortizations of copyright should be based on the copyright's useful life. However, it is acceptable to practice to directly write off the cost of copyright against the revenue of the first printing. So, this is the amortizations of copyright. Next is ang franchise. Franchise is it is an agreement in which one party called the franchisor grants certain rights to other party called the franchisee. So, franchise cost number one. Initial franchise fee includes the lump sum payment for the acquisitions of the franchise and all legal fees and expenses incurred in connection with the acquisitions of the right. Number two is continuing or periodic franchise fee. This represents the continuous payment to the franchisor for the providing specific future services such as advertising and continued use of intangible rights of the franchisee or recognized as revenue when continuing services are rendered, for example, the gross sales. Next is this is also considered as the operating expense in the company. So, amortizations of franchise. Una is granted for the definite period, amortized over the useful life as or definite period whichever is shorter. Second is granted indefinitely, shall not be amortized but rather tested for the impairment at least annually. Book franchisor. So the revenue of the books of the franchisor is bounded under the PFRS 15 when the franchisor transfers control of the goods or service to the franchisee. Depending on the performance obligation, the franchisor will recognize its revenue at a point of time or over the period of time. Next is leasehold or lease rights. So leasehold or lease rights is the right acquired by the lessee or by virtue or of a contract of at least to use the specific property owned by the lessor or the definite period of time considering for the certain sum of money. So, cost of leasehold. Number one is lump sum payment of the first negotiation of the lease. So, its accounting treatment could be charged to leasehold account prepaid rent and amortize it over the lease term. Next is amount paid in obtaining an assignment list from the original lessee. It's an accounting treatment to be charged to leasehold account. Next is periodic payments in the forms of rental. It's an accounting treatment is expense to the part of the lessee at income on the part of the lessor. Leasehold improvement. Leasehold improvements are improvements or modifications on a leased property, such as additions, alterations, remodeling, or renovations. This is considered as property, plant, and equipment. Examples: building walks, pavements, landscaping, driveways, and other structures. The list land lighting installations, extraordinary repairs, partitions, cabinets, shelves, ventilating systems made in leased buildings or terminations of the lease. Such improvements normally became the property of the owner, lessor, without any cost or obligations. And then, upon the termination of the lease, such improvements normally became the property of the owner or the lessor without any cost or obligation. Next is depreciation. Leasehold improvement. So, a leasehold improvement should be depreciated over the lease term or life of the improvements, whichever is shorter. If the lease is terminated prior to the agreed term, the unamortized cost of the leasehold improvements is considered as a loss. Next is trademark. Mark means any visible signs capable of distinguishing the good. Trademark or service mark. An enterprise shall include stamp or mark container of goods. So trade name also means the designations or identifying or distinguishing an enterprise. So examples ani are Google, BMW, Nike, KFC, Pepsi, and so on. So ang cost of trademark. When purchased, the cost includes the purchase price plus cost directly attributable to the acquisition. Second is if internally developed, the cost includes expenditures required to establish the including filing fees, registry fees, and other expenses incurred in securing the trademark. Legal fees and other costs of successfully prosecuting and defending trademark is also outright expense. Next is amortizations of trademark. Amortizations of trademark, the legal life of trademark is 10 years and may be renewed for periods of 10 years each. Because of easy renewals of the life of the trademark, an entity may appropriately classify this as an intangible assets with indefinite life. Therefore, the cost of the trademark is not amortized but subject to the test of impairment of at least annually. So here are the illustrations of trademark. On January 1, 2001, Ashley Company bought a trademark from Elisha Company for 4.5 million pesos. Ashley retained an independent consultant who estimated the trademark's life to be indefinite. Its carrying amount is Elisha's accounting records was 4 million. So here's the required. In Ashley's December 31, 2021 statement of financial position, what's the amount should be reported as trademark? So here is the solution. The carrying amount is equal to the cost of 4.5 million because the trademark has an indefinite life. Therefore, no amortization is required.
So hello everyone, I'm Camille Rose Resos. So karon ang i-report ang illustration sa page 918 customer list. So ang problem is on January 1 of the current year, Gabriel Company acquired the customer list of a large advertising agency for 2 million pesos. Gabriel expect to benefit from the information acquired from the customer list for a period of 5 years. Ang prepare the journal increase for the current year. So ang solution is first magdebit kag customer list nga 2 million pesos or credit pag cash nga 2 million pesos. And then mag amortization expense ang 2 million pesos imo siyang i-divide into 5 mo nang na 400,000 pesos. Imo pag 400,000 pesos imong i-debit, credit na po nimo 400,000 pesos pero ang account niya imo tayo sa accumulated amortization. So next is sa page 922 accounting for computer software cost. Na illustration dere. Then, ang isolve is accounting for computer software cost. Ang problem is during 2022, Socorro Company spent 2,500,000 pesos developing its new QuickSAP software package. Of this amount, 1,300,000 pesos was spent before technological feasibility was established for the product, which is to be marketed to third parties. The package was completed at December 31, 2022. Socorro expect a useful life of 8 years for this product with total revenues of 8 million pesos during 2021. Socorro realized revenues of 1,600,000 pesos. So required. First, prepare journal entries required in 2022 for foregoing facts. Second, prepare the entry to record amortization using the appropriate method on December 31, 2021. And lastly, at what amount should the computer software cost be reported in December 31, 2021 statement of financial position? So, there is the solution here. First is nagdebit sila og 100 million 1,300,000 pesos, and ang nga sa account is research and development expense, and nag-credit sila og computer software cost 2.5 million minus 1.3 million, so total is debit sila og 1.2 million, and nag-credit sila cash nga 2.5 million. Amortization expense, nagdebit sila 150,000. Accumulated amortization is 1,200,000 divided by 8 years. Gikredita nila og 150,000. And third is computer software cost is 1,200,000 minus accumulated amortization nga 150,000. So, ang carrying amount sa December 31, 2021 is 1,050,000 pesos. That's all sa illustration for accounting for computer software cost. And on page 927, so na illustration dire sa website cost. The following costs were incurred by Edmundo Company in developing its website. So first, undertaking feasibility studies nga 20,000, evaluating alternative products and suppliers nga 15,000, purchasing or developing hardware nga 16,000, obtaining a domain name nga 8,000, installing develop application on the web server nga 20,000, stress testing nga 3,000, designing the appearance like layout or color of web page nga 40,000, creating, purchasing, preparing example, creating links and identifying tags and uploading information nga 15,000, updating graphics and revising content nga 8,000, adding new functions, features, and content nga 3,000, reviewing security access nga 9,000, and training employees to operate the website nga 6,000. So, ang required compute for the website cost to be included as intangible asset, assuming first is the website is developed solely or primarily for promoting and advertising an entity-owned products and services. The website arises from development of its for internal or external access and shall be used for placing orders, and the expenditures can be directly attributed to preparing the website to operate in the manner intended by management. So, first solution, requirement number 1, 0. All costs are charged to expense. So, wala kay ang tanan nga cost is a charge sa expense. And requirement number 2. So, obtaining a domain name nga 8,000, installing development application on the web server nga 20,000, stress testing nga 3,000, designing the appearance, layout, and color of web page nga 40,000, creating, purchasing, preparing, and uploading the information nga 15,000. So, the total intangible asset is 86,000 pesos. The following costs are treated as expense. So, undertaking feasibilities studies nga 20,000, evaluating alternative products and suppliers nga 15,000, training employees to operate the website nga 6,000, and also the cost of purchasing or developing hardware is treated as property, plant, and equipment, or PPE, in accordance with PAS 16. The following operating costs are treated as expense not unless it meets the criteria for recognition as intangible assets, in which case it will add it to the carrying amount of the website cost. Updating graphics and revising content ng 8,000, adding new function, features, and content ng 3,000, and reviewing security access. So, ang kaning sa ubos is mga expense na siya. And kaning sa requirement number 2 nga, the total of 86,000, mo na siya gipangita nga kuan. Gipangita sa requirement number 2. That's all. Thank you.
And for the last part of the intangible assets that I will going to discuss is the goodwill. So what is goodwill? Goodwill is an asset arising from the excess of consideration transferred over the fair value of the net assets acquired. So in other words, it is arises when earnings exceed normal earnings by reason of good name, capable staff and personnel, high credit standing, reputation for fair dealings, reputation for superior products, favorable location, and list of regular customers. So to further understand this, I have an example. So if Company A acquires Company B for 500,000 pesos and the fair market value of Company B's net identifiable assets is only 400,000 pesos, the goodwill would be calculated as 500,000 minus 400,000, which is 100,000. So this 100,000 will be considered as the goodwill. So that 100,000 will be recorded as an intangible asset or the goodwill on Company A's balance sheet. So, why ang A gipalit nila ang Company B og 500,000 in which the fair market value for that Company B is only 400,000. So, for instance, maybe it's because of the good reputation that Company B possess. Next is the recognition of goodwill. So, internally developed goodwill is not recognized. Then, we have purchase goodwill that arises from business combination and it therefore recognized. So methods of computing goodwill. First, we have purchase of average excess earnings. Second, capitalization of average excess earnings. Third, capitalization of average earnings. And for the last is present value or discounted value average excess earning. And we have this simple problem. Aryan Company engaged in service to compute the goodwill and purchase price for the acquisition of Rosalina Company. The following data are available for the Rosalina Company. We have the current assets, investments, and PPE, which will total to 22 million. We have the current liabilities, non-current liabilities, ordinary shares, share premium, accumulated profits, will also total to 22 million. So, the problem is you found out that the investment have a fair value of 1,500,000 and the current assets and property, plant, and equipment are understated by 1 million and 2 million respectively. All other assets and equities are properly stated. An examination of the company's income for the last 5 years revealed that the total earnings amounted to 8,900,000. The said earnings include loss on sale of equipment during the last year of 300,000 pesos and 200,000 pesos annual bonus of the president. The normal rate of return is 10%. So required is we're going to compute for the goodwill and the corresponding purchase price, assuming that purchase of goodwill for 5 years. Capitalization of average exist earnings using 10%, capitalization of average earnings using 12%, and discounted average exist earnings using 14% rate. So for the solution, we're going to get first the average earnings. And getting the average earnings, we're going to get first the fair value of net asset acquired. So for the current assets, which is 5 million plus 1 million, which is understated, will equate to 6 million. Investment, 2 million minus 500,000, 1.5. Property, plant, and equipment, or the PPE, which is 15 million plus 2 million, which got understated as well. So minus nimo siya sa current liabilities and non-current liabilities, which will equate to 16 million. So fair value of net asset acquired is 16 million. So times siya sa multiplied by 10%, which is the normal rate of return. So for the normal earnings, we have 1,600,000. So total earnings, which is 8,900 pesos, plus the loss on sale of equipment, which is 300,000 pesos, and plus bonus for 5 years, which is 200,000 times 5, which is the number of years, will equate to 1 million. And for the operating income is 10,200,000. So it will be divided into the number of years, which is 5. So we will get the average earnings, which is 2,040,000. So for the requirement number 1, which is to get the purchase of goodwill for 5 years. So average earnings, which is 2,040,000, minus the normal earning, which is 1,600,000, which will equate to 440,000. So we're going to multiply it by the capitalization period, which is 5 years. Then we can get 2,200,000. So we already get the goodwill. So we're going to get the purchase price. So that goodwill will be added to fair value of net asset acquired, which is the 16 million. So we can get 18,200,000. So for our purchase of goodwill for 5 years is 18,200,000. For the requirement number 2, which is capitalization of average exist earnings using 10%. So the average exist earnings, which is the 440,000, we're just going to divide it
by capitalization rate, which is 10%, so we can get 4,400,000. So that we already get the goodwill, so we're just going to add the fair value of net asset acquired to get the purchase price, which is 20,400,000. Next is the requirement number 3, which is capitalization of average earnings using 12%. So from the average earnings, which is 2,040,000, we're just going to divide it by capitalization rate 12%. Then we can get the purchase price 17 million. And we're going to minus it by fair value of net asset, which is 16 million. So our goodwill is 1 million rather. And for the last requirement, which is to get the discounted average exist earnings using 14% rate. So from average exist earnings, which is 440,000, we're going to multiply it by the fair value present value of ordinary annuity of 14% for 5 periods, which is 3.4331. Then we can get the goodwill 1,510,564 pesos. So to get the purchase price, we're going to add the fair value of net asset from that goodwill. Then it will equate to 17 million gain on bargain purchase or previously negative goodwill. Bargain purchases involve buying assets for less than fair market value. Inquirer must record the difference between the purchase price and fair value as a gain on the balance sheet as negative goodwill. The difference in the price paid and fair value is recorded as gain. So for the return on average net assets, the return on average assets shows an organization's ability to generate profits using its asset. An ROA or return on assets provides an average of revenues, while the ROTA or the return on total assets provides an exact total of profits from overall total assets. This is a formula for the return of average assets, which is net income divided by average total asset value. So in computing this, return on average asset, first is to compute for the average assets by totaling the total net assets for a certain number of periods. Second is to get the average net assets by using the following formula, which is total net assets divided by the number of periods. Then, normal earnings would be average net assets multiplied by normal rate of return. So I have here a sample problem. Brenalin Company engaged your services to compute the goodwill and purchase price for the acquisition of Mayumi Company. The following data are available for the Mayumi Company. So we have the net income and net assets for the certain periods, 2018, 2019, 2020, and 2021. So it is agreed that goodwill is measured by capitalizing exist earnings at 20% with normal return and average net assets at 18%. So required is how much are the goodwill and the purchase price for Mayumi Company. And for the solution, we have the average net assets for the following years: 2018, 6,400,000; 2019, 8,600,000; 2020, 8,800,000; and for the current year, which 2021, 9 million, which will total to 32,800,000. So it will be divided for the number of periods, which is 4. Then it will equate to 8,200,000. Next is for the average earnings for the following years. For 2018, 1,200,000; 2019, 1,500,000; 2020, 2,100,000; and for 2021, 2,200,000, which will equate to 7 million. So as always, it will be divided for the number of years, which is 4. Then we'll get the average earnings, which is 1,750,000. So less by normal earnings, which is the 8,200,000 times the 18% rate, which will equate to 1,476,000. So we're just going to minus it, so we can get the 274,000. Then 274,000 will be our average exist earnings, which is divided by the capitalization rate, which is 20%. So we can get the goodwill, which is 1,370,000. So to get the purchase price, of course, we're going to add the fair value of net asset acquired, which is 9 million. Then we can get the 10,370,000 for our purchase price. So that ends our report for chapter 22 and 23, which is substantive test of intangible assets and prepared expenses and intangible assets. Thank you for listening.